Hey everyone, welcome back to Free the Money. I'm so excited for today's episode. I'm going to be joined by Andy Schectman, the CEO of Miles Franklin Precious Metals, one of the largest precious metals dealers in the United States. He's been in the industry for over 36 years. He is one of the most well-respected voices in the industry. He's widely known for his macro analysis on gold and silver markets, his insights into global monetary policy, and his perspective on what many see as a structural shift or reset happening in the financial system. Let's get into the show. Hi, Andy. It is a pleasure to have you on Free the Money today. You are obviously an incredible voice. You've been in the business for a very long time. It's really an honor to have you on my show. Welcome to Free the Money.
Thank you, Bree. Pleasure is mine. I appreciate the invite. Good to be here.
What I really love about you is you obviously have been in this industry for a very long time. I think I read online for over 36 years now. So you have seen all sorts of markets, but what really I think makes you different than any other person I've been following, really in the gold and silver industry is the fact that you look at macroeconomics, you're taking into consideration cryptocurrencies. And, I really enjoyed your recent episode with Catherine Austin Fitz. You got into the Genius Act, and I think you have such a great perspective on that. So I'd love to get into that later in the show, but I
Sure.
guess I would just love to hear about your background, about how, you started Miles Franklin, and I heard that you founded this company with your father. Yeah, so just a little bit about your background and really your expertise.
Sure. Well, I appreciate the kind words. Yeah, it seems like a lifetime ago. Basically, it was. In 1989, on a wing and a prayer, my father and I started a company in an office the size of a closet before the internet. I was 19 years old. um, I went to the University of Minnesota with intentions of being a baseball player and hurt myself and started a business with my father I knew nothing about. We started, again, before the internet, typing out a newsletter on a word processor. My father's best friend who lent us the money, $60,000 to start the company, his middle name was Franklin. My dad's middle name is Miles. Um, and my parents sold their life insurance policies, kind of a Hail Mary, so to speak. And I would say we're the most unlikely cast of characters to have ever succeeded. We just eclipsed $15 billion in sales without a
Wow.
customer complaint. But at the very beginning, my father said to me, look, there's going to be only one rule. You can follow it. We'll do this together. Otherwise, they'll fire you. And I'm like, all right, well, okay. Well, what's that one rule? I can live with that. He said, you'll buy something every 2 weeks when you get paid, silver or gold. I don't care if it's 1 ounce of silver or a silver dime. I mean, you'll buy something. Fine. I said, well, that was the best gift I've ever been given, Bree, to understand the laws of compounding, to have them work in your favor instead of against you. And it's not always just of compounding of interest, it's compounding of time. If you work out or if you play golf, as we were talking about, or if you do anything in life, it doesn't just come like that. It takes
Yeah.
time, it takes repetition, it takes, a regimented path, or you never really achieve success. It was the greatest gift I've ever been given. I own the company outright. My father won't fire me any longer, like he said he would if I didn't buy every 2 weeks. But I've honored my promise to him. And honest to God, it was the best gift I've ever been given. And therefore, every person who works for me, most of which are my friends going back to childhood, all of them had very, very successful careers up until COVID. That's when they all came to work for me right around the time of the pandemic. They're Wall Street guys and gals. There's hedge fund people, Wharton grads, private equity, et cetera. And now they're working with me. They're all my best friends since childhood, literally. And the only rule that I said to them is you'll buy something every 2 weeks. And every one of them has thanked me because the laws of compounding are amazing when they work for you. So when we talk about gold and silver, anyways, it's important to understand that I look at it differently than a lot of people do. I don't look at it as an investment. To me, it's wealth, Bree, that's outlived 2 world wars. It's outlived German hyperinflation, the Great Depression, every pandemic, everything. And for the last 6 years or so, the most well-informed traders in the world, forget about the wealthiest, which they are, but the most well-informed, that being the central banks and even the Bank of International Settlements, who reclassified gold a tier one asset. They've been buying it like it's going out of style quietly. Shh, don't tell anyone, because the mainstream doesn't pick it up. What's really interesting to me more than anything is now this has moved to the United States. Since Trump won the election a year ago, November, the most well-informed and well-funded traders on the planet here in the United States.
Hmm.
Maybe you could say they being the Wall Street traders that are an extension of the government, the JPs, the Goldmans, the Citis, the Bank of America. These traders, whoever the hell they are, whoever it is, maybe it's the Exchange Stabilization Fund on behalf of the U.S. Treasury Department, has been standing for delivery on COMEX here in the United States in New York at record amounts every single month. And when I mean record, I mean billions of dollars worth of deliveries, billions and billions and billions and billions and billions every month for 16 straight months. And this is the part of the story that the mainstream has missed. They've noticed the rise in gold and silver. They've noticed it becoming more noticeable. And I
Hmm.
think they have no choice but to admit it. But what they've missed entirely is who's standing for delivery. What about the delivery that used to represent less than 1% of all contracts that were issued that would stand for delivery? Now we're seeing massive, massive deliveries. And no one's asking who's
Yeah.
bringing in hundreds of billions of dollars worth of gold and silver? Who's doing it every month unabated? Every month. In December, it was the largest December delivery for silver in the history of the COMEX market since 1974. Not a whisper out of the so-called experts on mainstream, financial news networks. But this, to me, is part and parcel that life goes full circle. Doesn't always repeat, certainly rhymes. And what we are seeing right now is, I think, a reintegration of gold and silver into the monetary system and into the recognition of the policymakers that gold is not just a pet rock, it's actually wealth that probably has a greater demand than ever
Yeah.
in our lifetimes because the lack of counterparty risk and how it's outperformed things like 10-year treasuries. And silver is now a critical mineral according to the US government. It's also a critical mineral according to the European Union. It's a critical mineral according to the Chinese, who are the largest refiners of doré in the world and are now uh, uh, massively curtailing exports. And the part that most people missed is their November statement that, we're the second largest producer in the world and our domestic production will stay for domestic needs. So everything is coming full circle. As we talk about gold and silver, I just want to say, to me, it's wealth. It always has been for 36 years for me. It's wealth, it's money. Um, it's not an investment. And that's how I look at it. And that's how I try and explain it. And to me, you're right, macroeconomics is everything. It's not the micro. It's not the what. It's not what gold and silver should I own and why
Yeah.
should I own. It's the why should I accumulate it to begin
Exactly.
with. The why is the most important thing, and that's what I try and talk about. And um, that's brought me here after 36 years. I don't know. It's been a crazy journey for sure, and but it's nice to be here with you chatting about it.
Oh, thank you. So, what would you say in the most recent years? I would say, like the past 5 years, we have obviously seen the printers going nuts, the dollar being devalued. Do you think that's why these central banks now are ditching U.S. treasuries and are now accumulating mass amounts? And also with the United States saying that silver is now a critical mineral, do you think we're going to see the U.S. purchasing much more silver? And do you think that's possibly what's going on with even, the 300-to-1 ratio with the paper to physical markets?
Yeah, I think they're definitely going to accumulate a lot more. They've passed um, regulations or laws saying
Okay.
that they're going to issue a strategic stockpile or pay for a strategic
Yeah.
stockpile and put price floors underneath all critical minerals. Absolutely. The U.S. I believe they're the ones behind these massive deliveries.
Yeah.
The Exchange Stabilization Fund, which is a branch, I guess you could say, a division of the Treasury, does not need to get congressional approval or talk about it publicly if they're doing it for national security.
Yeah.
And who the hell is coming up with billions and billions and billions and billions and billions every single month? I do believe that that is exactly what's happening with silver and with gold. And when you talk about why would central banks be buying gold the way that they have been, not only is it the ridiculous fiscal irresponsibility that we have as a country, which we do. I mean, people, look, if you work long enough, you'll make $1 million. It seemed really hard to do when I was a kid. A million was a huge number. And now it just seems that it's within everyone's reach. You may not save it, probably not, but you'll
Probably be
earn it
having to buy
if you
it, yeah.
work long enough. So, billion, we see lots of billionaires. A trillion can't be that far off. A trillion seconds ago was 31,688 years ago. And we have a $38 trillion debt, which excludes Medicare, Medicaid, Social Security,
Mhm,
and government military pensions. You add it all together, you're at 200 trillion. In a country that Ray Dalio said 60% of this country has an education or a reading proficiency level under that of the sixth grade. So we're uneducated,
uh,
we're broke, and basically insolvent. We don't make anything. Haven't for years. We've offshored all our manufacturing. Guess what is just in time to kneecap the really the labor market is AI, which
mhm,
will take away the majority of entry-level jobs. They say 50% or more within the
yeah,
next couple of years. My son, who works for me now, was he was a accountant at Price Waterhouse after graduating from the Ross School of Business in Michigan, and getting paid 80 grand a year to analyze a balance sheet for a real estate investment trust. Well, what the hell did they need a kid to do that for out of college when AI just like that done? These kind of jobs are done for. You'll have a K-shaped economy. You're going to have the rich get richer with great efficiency at the expense of
mhm,
millions of jobs and that K-shaped economy. So I think the world looks at the United States first and foremost, and they see not only fiscal irresponsibility, they see an economy that is getting, I think, rather precarious moving forward with indebtedness that isn't slowing down. But what really ruined it, I think, for the US is that, this is a system that is based upon trust. When we
mhm,
left the gold standard in 1971, when Nixon closed the gold window, the dollar was backed by nothing. Yes, we had the petro deal with the Saudis, which 2 years ago they decided to not renew. They said, well, we'll still take dollars, but not just dollars. So what is the dollar? A dollar is a promise, it's an IOU, and it's based on trust. And, we invaded Iraq 22 years ago under false pretenses, looking for weapons that didn't exist. We
yeah,
destroyed their country. We toppled their regime. I want it to be known I'm a patriot. I thank God every day that I was born in this country. I mean, I'm the least likely person to achieve what I did through hard work, meritocracy. I outworked people, right?
mhm,
And, but I thank God every day I'm here. So understand when I say this, I'm trying to paint a picture on how the rest of the world would look at us. So we went there, we destroyed the country, false pretenses, toppled the regime, and we're still there today, 22 years later. We're still there. And
all funded with the dollar.
right. And so we can make these decisions unilaterally, but if other countries do things that we don't like, such as Russia, um, in their mind, defending their own sovereignty. Now,
Yeah,
again, I am not passing judgment on the Ukraine-Russia war. They felt they needed to do it. That's their job. What I'm
mhm,
saying, that's their business. What I'm saying is it is not for the United States and the loss of being impartial as the reserve status
yeah,
to pass judgment, to be judge, jury, and executioner. So when you sanction, when you put on tariffs, and most of which are actually sanctions pretending to be tariffs, if you buy oil from Russia, we're going to put 150% tariff on you. No, that's a sanction. So when you sanction, when you tariff, when you go around with military, you topple regimes and you're implementing regime change and doing all of these things, you've lost what I think not only neutrality, but you've lost trust. And so why the rest of the world is buying gold and silver.
mhm,
If we look at gold compared to the 10-year treasury, see when you look at the petrodollar deal, every country had to stockpile dollars to buy oil for all of these years. When you stockpile dollars as the world reserve currency, you put the reserves in treasuries to earn return, safety, liquidity, etc. So when you look at what's happening right now and compare the 10-year treasury to gold for 25 years, the price of gold has doubled the 10-year treasury. Look at 2 years ago. 10-year treasury was up 4.5%, and gold was up 40%. You look
yeah,
at last year, gold was up 80%. The 10-year treasury up just under 4. it's an accelerating curve. So it has outperformed it tremendously. It has no counterparty risk. That's the thing with gold. It's an asset that simultaneously is no one else's liability. It
Yeah.
has no counterparty risk. So it's outperformed it, has no counterparty risk, can't be sanctioned. And I
Mhm.
think that's the problem, is that when you are a country where the value or the value of the currency that is the world reserve currency is all based on trust, and it seems like we've done more damage to this country politically than any external foe could have ever have done over the last 5 6 years. And I think that's really to the heart of it, is that these countries are looking for a break away from the Western hegemony.
Yeah.
They see that the rules don't apply to us and do to everyone else, and then they see fiscal irresponsibility, where we're, in essence, creating pretty damn well near $1 trillion in debt every 100 days. And it's interesting. I was reading an article, Bree, that we saw. Let me see if I can actually find it here, because it was really fascinating. We saw the over the last few years, we've seen the largest drawdown. Over the last year, actually, we've seen the largest drawdown in the federal workforce ever. 270,000 people in 1 year. It's the largest peacetime reduction on record ever, and that's per the Cato Institute. But yet we still spent $7 trillion in fiscal year 2025, 300 billion more than the year before. And I think
Yeah.
what that tells you, obviously, it's not a staffing problem federally, it's a structure problem. And, you could get rid of, if you took the entire federal payroll, which is about $340 billion, that's 5% of the budget. You could fire every single politician out there,
Mhm.
and 95% of spending keeps going. And it's because the things that are destroying the dollar, Social Security, Medicare, Medicaid, interest on the debt, that 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 those are all on autopilot. And it's reached a point now where our fiscal irresponsibility is accelerating, and there's not much we can do to fix it unless we make the very difficult choices, which no one has the courage to do. Stop the entitlements. And
Yeah.
this
I
is something that's not getting better. So this is why the governments of the world are moving to gold. Outperformance, no sanctions, no counterparty risk. And
Neutral.
I think this is a cumulative move by much of the global South. And now all of a sudden, someone here in the United States has got wind of it, and we're doing the same thing. So this is a move that price is a tool of misdirection. Don't pay attention to the price. All you need to know is who the hell is standing for delivery for billions and billions and billions and billions and billions every single month.
Yeah.
Those people don't do things for the hell of it. They
No.
are definitely the ones with the information, and they're using it to their advantage by front running,
Of course.
when what we see right now in the equity markets is the largest allocation, retail allocation, to equities in the history of the market. Mom and pop retail is all in on stocks, and margin debt, highest
Yeah.
ever, and option exposure, highest ever, as the big money is slowly exiting the stock market, like Buffett, like Bezos, like Zuckerberg, like Diamond. They're all leaving. And who is standing for delivery at these levels? The central banks, the commercial banks, and
Of course.
massive sovereign wealth funds and family offices are
And even
front
Tether.
running this side of the ledger.
Yeah, no, that's a lot to unpack there. But yeah, I do think we're not really seeing the media obviously talking about this, about who's standing for delivery. That's why I love on your channel, you bring this up a lot and you're challenging people to actually ask the tough questions. I do think it is also interesting. You have brought this up in one of your shows. You talked about Triffin's dilemma and how basically you can't be the world reserve currency and run a trade surplus. Do you believe the United States under Trump's administration is possibly purposefully doing this, or do you think this is just the decline of basically the American empire?
Well, it's a little bit of both, but I do think they are doing it, and they can't say it out loud. I mean, Vice President Vance talked about it, gave a speech on it, wrote about it on White House letterhead, actually mentioning Triffin's dilemma, that it is a
Mhm.
privilege we can no longer afford, as did the previous, and this guy was a hell of a knucklehead, Jared Bernstein. I don't know if you ever watched him on X trying to explain how treasuries were created and sold. It was embarrassing. But he
Oh
wrote a
my
report
gosh.
called Dethrone King Dollar that advocates for just that the reserve currency is something that we can't afford anymore. Because what happens is that you'll always run a trade imbalance is the gist of it, that the world needs more dollars than we can provide through trade alone. And so over time, countries have to sell their currency to buy ours, weakens theirs against ours in order to do things like buy oil or conduct international
Mhm.
business. And so what that does is it creates an environment where over time, these currencies become worth less and less and less and less against the US dollar. So manufacturing flows to places like Cambodia or Vietnam or China where they can manufacture at a fraction of the cost. And that is a problem when you realize we are uneducated, we are
Mhm.
broke, we make nothing, and here's AI. So you have an environment where this economy, our children, our grandchildren are screwed if we don't fix this. Well, how do you fix it? You soft default on the dollar. Not only that, look at our infrastructure, our energy infrastructure, our grid is
Mhm.
outdated and is in massive need of, it's in disrepair and massive need of upgrading. The Chinese are upgrading every year um, grids that are larger than our entire grid. I mean, every year they are spending the trade imbalance that they got on the other
Mhm.
side of it, their surplus, and investing into tangible things like precious metals, like oil,
Yeah.
like building their grid so that they can be the leader in AI and digital technology. These are the things that must be done. And to do that here, which is a battle that cannot be lost. And the only way to do it is to pay for it. Well, how are you going to pay for it when the world is, and this isn't the word, but detreasurizing? They don't want our debt anymore because they don't trust us. We're insolvent. We're broke. We're tyrannical, we sanction, we do all these things and we're irresponsible. So who wants our treasuries? Nobody. So who has to buy it? The Fed? I
Mhm.
guess we're supposed to believe that the Cayman Islands is one of the two largest holders of U.S. treasuries. That seems a little strange to me. Or Great Britain, number one, I think. I think they've moved to number one ahead of China. So you have two drunk guys leaning against each other at bar time at the end of the night so they don't fall over. The two most indebted countries on the planet are buying each other's debt. It just
Yeah.
makes no sense. So point of it is, how do you bring back manufacturing and sell your products when Triffin's dilemma says you can't?
Mhm.
They will, in my mind, and they are beginning to default on the reserve status. They will print they will give away the dollar reserve status in an effort, I believe, to reshore manufacturing. And that's what I've been talking a lot about. And
Mhm.
it's a little deeper than just what I'm saying here, but they have to do it or our kids or grandchildren are in very, very big trouble because of the situation we've left them. A massive debt, uneducated, nothing in the way of savings. And, we don't make anything. That's not a recipe. In other words, there's only a few ways to get out of the indebtedness. You can grow your way out, or you have to have manufacturing to do so. You can inflate. That's what all governments have done, hyperinflate, or you can default. And I think all three of them, we would love to grow our way out of it, but we have to bring back manufacturing first. And the only way to sell manufacturing is to give up on the reserve status, according to Triffin's dilemma. I think they will. A soft default on the reserve status will become evident, I believe, before the end of the Trump administration. But the things that we see happening right now
Yeah.
are part and parcel to that outcome.
So just a follow-up question on that. So obviously we're seeing a lot with stable coins right now. We have the Genius Act, we have the Clarity Act. Do you think that's also going to possibly save the dollar because basically everyone all over the world will be kind of contributing to our debt? Obviously, these stablecoin issuers buying U.S. Treasury bonds, like I think they're the 90-day treasuries. So like, how does that play into part? That's kind of what I've been playing with in my head recently.
Yeah, and that's really been the central thesis to what I've been talking about, that and Judy Shelton's plan. And Judy
Yeah.
just met with, it was a bummer she didn't get appointed the head of the Federal Reserve, but she just met with Scott Bessent recently, the Treasury Secretary, and talked about her plan, where she told me when I interviewed her, and Michelle McCory, my co-host, interviewed her also subsequently, and she's told both of us that Trump told her in no uncertain terms that July 4th of this year is the biggest day of his presidency, the 250th anniversary, and he would issue
Mhm.
gold-backed treasuries
Interesting.
starting with the 50-year and moving all the way down to 30, 20, 10, and 5-year. But if you look at what the Genius Act is, it's diabolically genius, and it is. I mean, it's stable. So basically, by January of next year, when it goes into effect, you'll never send a check again. You'll never send a wire again. It's kind of like Venmo and Zelle. Money will move instantly on a blockchain
Mhm.
network. Think of the blockchain network as a highway. Think of the stable coins as a car inside that highway, and the backing of those stable coins will be 90-day or less U.S. Treasury. So if I owe you $1,000 and I send it to you via
Mhm.
this new system, when I send you the money, a stable coin is created with Treasury backing it. When you receive it, the stable coin is burnt, it's gone, and you have the money in your account. You won't notice anything different other than instant settlement, instant movement of money. But the interest on that Treasury is not transferable. That's part of the Clarity Act between
Mhm.
you and I. The issuer of the Treasury keeps, or the stablecoin keeps the interest on the Treasury. And if you look at a company like USA Tether, their CEO is Bo Hines.
Mhm.
Bo Hines was Trump's crypto czar until August. He's now been put into the the CEO role of USA Tether, which will be the primary benefactor of issuing these stablecoins. Other companies will too, of course, and
Yeah.
USDT and or USDC, I think it is. I don't know. It's the
Yeah,
Goldman
circle.
Sachs Circle One. You have Visa, Master. They'll all issue, but they'll all be backed by 90-day or less treasuries. That's part of the rule. Now you look at Tether; they've already accumulated north of 14 billion in gold,
Yeah.
and
Aren't they
that's
aren't they like the biggest, owner of gold outside of central banks?
They are. They are. And if I had to guess, now here's where supposition comes in. This is the wink, wink, nod, nod part. We put you in, Bo, and Tether. You guys have never, you guys were in trouble for a while with the Treasury. We're going to let that slide because of your help that you're going to give us. In other words, anytime money moves, whether you buy a pack of cigarettes or a new car or a new house, you're using stable coins, which anytime money moves anywhere, that are backed by treasuries and the interest isn't transferable. What do you do with it? You buy gold. What would that do? If you buy gold, the price of gold goes higher and higher and higher and higher. Well, who's bringing in all this gold and standing for delivery? Think about that for a minute. Every month for the last 16 months, billions and billions never happened. It's 4 feet of snow in Death Valley in July. It doesn't happen. But billions and billions and billions and billions keep coming in. So someone is stockpiling gold. As money moves anywhere, anytime, that interest is not transferable. So what do? They buy gold. Pushes the price of gold higher and higher and higher
Mhm.
and higher and higher synthetically, just like the synthetic demand for U.S. Treasuries. Instead of the organic demand, we're
Mhm.
creating synthetic demand. Keeps the
Yeah.
front end of the bond market very low, very low. The federal funds rate, the overnight rate, super low, next to zero. You're capping interest rates. So by the way, when you cap interest rates, which is the release valve when inflation is created, where does it, if you're capping it, it can't get out. It just manifests in higher prices, which we will see. However, the rising of gold devalues the dollar. This is
Yeah.
number one. So when you take a look, for example, at Trump talks about how the stock market is at it's at 50,000, it's all-time highs, it's done so well. But if you measure it in gold, when Trump took
Mhm.
office, it took 16 ounces of gold to buy the Dow. Now it takes 10. If you go back to 2005 and you measure the value of a house, it was
Mhm.
$240,000. In 2005, the average price of a house in gold was 450. That's 510 ounces. So you could have paid 510 ounces for that house in 2005 and been clear.
Quick commercial break. I just want to talk to you about I Trust Capital. So, with inflation, taxes, and market uncertainty, you don't have to let these things control your future. That's why I use I Trust Capital. I Trust Capital lets you invest in crypto, silver, and gold all inside a tax advantage IRA. I've been using I Trust Capital since 2021. It's like a traditional IRA, but upgraded. I'm able to invest in assets like Bitcoin and XRP while still getting the same tax benefits you'd expect from a traditional IRA. There are no monthly fees. The platform is super simple. And the best part is, this is such a powerful way to diversify your retirement outside of just stocks and bonds. So you're able to roll over your existing IRA or you can start a new one. And if you sign up down below with this link, you're able to actually get a $100 funding bonus. So take charge of your financial future with I Trust Capital.
Today, the house is 500,000. It's doubled. It's done well, right? But that 500 ounces of
Yeah.
gold is $2.5 million. It buys you 5 houses. Everything against gold is devaluing.
Yeah.
We measure things against the dollar index, and all of these currencies, as we mentioned, because of Triffin's dilemma, have to devalue their currency against ours. It's a faulty measuring stick. You're measuring against a melting ice cube. So instead, we measure it against gold. When Roosevelt confiscated gold in 33, gold was $20 an ounce. He paid everyone $20.67. And those 67 cents were a lot of money when a dozen eggs were a nickel. But then he immediately devalued the dollar by 40%, making it $35. When you value the dollar, you measure it against the measuring stick, it is gold. And by the way, any asset you can think of over the last, really since 71, but more so over the last 25 years, any asset, measured in gold and you'll see it's going down, it's devaluing. Measured in dollars, it's going up. In other
Yeah.
words, the dollar is devaluing against gold. And so if they continue to accumulate gold every time money moves and they take that interest and pile it into gold, gold goes higher, 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 and the dollar goes lower, 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 lower. Now, this is the first step in order to sell manufacturing to the world. That's what they've done to us. They've devalued their currency against the dollar to sell manufacturing. So if we softly, don't announce it, but softly give up on the reserve status and let the dollar fall tremendously, this is how you sell manufacturing. How do you get it back? Well, if Judy Shelton is right, and you peg the back end of the bond market to gold, redeemability in gold was zero coupon, no interest. So you sell a $20 million bond 20 years out with zero coupon, zero interest, redeemable in gold. The more foolish we are with monetary policy and fiscal irresponsibility, the higher the price of gold goes. In fact, the Van Eck funds just came out. Van Eck, the mutual fund company, said if we lose the reserve status, gold could go as high as $180,000. So let's use $180,000 as an example. If you sell a $20 million bond at 5,000 gold, it's 4,000 ounces. That would be deliverable in 20 years. No interest, right? No upfront borrowing costs. This is how you bring back manufacturing. No upfront borrowing costs. You pay the gold in 20, 30, 40, or 50 years. Let's just use to play this out. If Van Eck is right, and we do default on the reserve status, and gold went to 180,000, I'm not exact, it was their emerging bond market group that did this study, but at $180,000, if you take 20 million, it's 4,000 ounces today, but if you take 20 million and divide it by 185,000, well, that's 108 ounces of gold. So in 20 years, you only need 108 ounces, not the 4,000 ounces. So the point I'm getting at is that what could possibly happen, what they could possibly be doing is to use the Genius Act to create synthetic demand for the dollar. The interest is not transferable. They take it and put it into things like gold, which devalues the dollar, pushes gold much higher, tie gold redeemability to the back end of the bond market. As Judy Shelton said, in no uncertain terms, Andy, Trump told me he's going to do this on July 4th. Now, she said that on my show twice. She's written a book called As Good as Gold, where she talks about it. She has a next channel. She talks about it all the time. She's one of the smartest human beings I've ever met in my life. Talking to her off air, it's like it blows your mind how smart and connected she is. So if she's right, and they do that, well, the continuing movement of money throughout the world pushes the price of gold higher, devalues the dollar, and makes the back end backing with gold on zero coupon bonds possible. You could actually bring back manufacturing at zero upfront borrowing costs, pay it down the road at much less in terms of ounces of gold, and look the world in the face and say, look, we to the United States, Trump would, we screwed up a good thing. We did. And our kids are dead in the water if we don't bring back manufacturing. We cannot be reliant on countries like China for everything from aspirin to aircraft parts. We can't. We need to bring it back no matter what. How do we do it? Triffin's dilemma says we can't. Vice President Vance said that. The former economic advisor to Biden said it. So how do you do it? This is a pathway to doing it. Now, I think I'm the only one saying this.
Yeah,
And
I haven't heard anyone else talk about this.
yeah, and maybe I'm crazy, but I do see how it is a very, very, very distinct possibility that something is happening with gold. Because if you look at the other side of the globe, you look at the BRICS, they have already their Enbridge platform, which is cross-border settlement, with the unit settlement currency, which is 40% gold-backed and deliverable, is already operational. If you look at the expansion of the Shanghai Gold Exchange, the first one was just expanded into Hong Kong, done. When metal leaves China, it has to go through Hong Kong by law, when gold does. And the next one is being built in Saudi Arabia right now. So look at it right now. They can trade over Enbridge or the SIPS, the Cross Interbank Payment System, both of which are not compatible with SWIFT. they can sell the Saudis can sell their oil to China for a digital yuan. They may not want the
Mhm.
digital yuan. Goes over the M bridge or the SIPS network, which the SWIFT cannot monitor. The SWIFT can't be kicked out, can't sanction.
Mhm. Yeah,
But
of course.
the imbalances are settled in gold, right? So Shanghai says we will now convert the yuan directly into gold without going into dollars first. They just passed this. So Saudi Arabia can then convert into gold immediately in
Mhm.
Hong Kong and take possession of it instead of holding the yuan. It's for trade imbalances
Yeah.
or currency imbalances. And
Makes the
this
most sense.
expansion, which is going to go all through the Belt Road, which is Africa and Asia and South America and parts of Europe, the next one is under construction in Saudi Arabia right now. I mean, and if you look at who built the M Bridge, it's China, Hong Kong, Thailand, United Arab Emirates, and Saudi Arabia, the fifth participant, who is now building a Shanghai vault in their country so that when they trade with one another using their local currencies, they settle imbalances in gold. This is the crux of the problem. In other words, you start to trade with one another, like China trading with the Asian nations, the countries in Southeast Asia. They've already all signed up to it, to SIPS and to Enbridge. It's China's largest trading partner by far. There's 800 million people, twice that of the US. And all of these countries who stop using dollars in settlement for
Mhm.
buying things, that chips away at the settlement status of the dollar. And if you don't stockpile dollars, you don't need to stockpile treasuries, which chips away at the reserve status
Yeah.
of the dollar. These things, I used to say it's too stupid to be stupid, but you wonder how much of it is pre-planned? How much of it
Orchestrated.
are they
Yeah.
trying to tell the world, we don't want you to use the dollar anymore. Use your own
Yeah.
currencies, use your own systems to settle. And then what's happening with gold right now will replace the Treasury. I think the US knows that. Someone in this administration knows it. So instead of using gold, you use it to back the back end of the Treasury market, which has the established rails already for tremendous liquidity. Could it happen? I don't see why not. But the bottom line is simply this: one way or the other, by hook or crook, if we do not bring back manufacturing, our kids are dead.
Mhm.
Our grandkids have no future. Period. End of story. If we don't make anything, we're indebted, we're uneducated, we're massively broken. Here comes AI just in time to kill all these jobs. Something must be done. And if there is any nobility in this, and what he, I hope, is trying to do, it is to give our kids and our grandkids not only a chance for a life that we've had, but also to grow our way back into being the engine of production and
Mhm.
manufacturing that we once were. And instead of being the largest debtor nation on the planet, maybe we can work our way back into being a creditor nation.
Yeah, no, I think it's very well plausible. I mean, especially that's what Trump sort of ran on. So it would make sense that he would obviously be eager to bring back manufacturing to America. I do want to touch on an article I read the other day, and I'm sure you're pretty familiar with it. The article about Russia going back to dollar settlement. I think it was a Bloomberg article. What are your thoughts on this? I think they later maybe corrected it, but it seemed very fishy because all of a sudden, people allegedly started selling SLV, and then in comes the big bullion banks just scooping up physical silver at a heavy discount.
Yeah, you're very well informed. I think that to me, it was like, I don't know, the word fugazi comes to mind. I mean, it's you end up having Bloomberg come out and say that Russia is moving away, or is going to
Yeah.
rather use the dollar system, go back to the dollar system. And when that happened, you had all of a sudden the price of metals got killed. You saw all of the algorithms that kick in. You already have high margins. All of
Mhm.
these things happened, and um, ironically, they then come back and it allowed, the price to get clubbed and companies like JP Morgan to cover 700
Oh,
contracts at
wait.
the very, very, very bottom. And then they come out and say, oh, actually, we're not going back to the dollar system. It's almost like, Bloomberg did this
Mhm.
to create this panic. It's one of the things that bothers me about the market more than anything is that the market is far too reactionary. Instead of seeing the big picture, the macro picture, they react to the news of the day. And when you look at companies like Bloomberg, who have done a very poor job at telling anyone what was happening over the last several years, It's just part and parcel for it. But yeah, absolutely. They started the ball rolling under misinformation. It
Mhm.
created force index selling, margin hikes, etc. And in a matter of minutes, almost 3.5 trillion evaporated. And then Russia comes back on record saying they're not going back to the dollar. This is Bloomberg pumping the opposite narrative,
Mhm.
and it's like allowing these big banks that were offsides to reposition and get onside by dropping the price down and covering their shorts
Yeah.
or
Yeah.
standing for delivery, which is really crazy, by the way, because right now on the COMEX, let me just look real quick. I looked as of Friday. The open interest was 58,770 contracts, and each contract was 5,000 ounces of silver. So that's about 294 million ounces of silver
Which
as of today.
basically all that they have in their supplies, right? Or they
Yeah,
probably
well,
don't even have that much.
if you look at the registered
Yeah.
category, which are the bars that are backing the
Mhm.
contracts right now, there's only 90 million, just over 90 million ounces of silver in the registered category.
Oh my
So
gosh.
if even half of that open interest stands for
Mhm.
delivery, you're talking 150 million ounces, but there's only 90 million
Ye
ounces
Yeah, the math
available
is
for
not
delivery.
mathing.
What could possibly go wrong? And first day of delivery is only less than 2 weeks away. What is the date today? The 16th, 17th? It's 10 days away.
27 is
So
it the 27th or
you're looking at a situation where this drawdown of COMEX inventory is mirroring what's happening in London and in Shanghai.
Yeah.
In London, there's 2 billion ounces of outstanding paper contracts. Standing behind it is 140 million ounces of silver. So you're talking the rehypothecation of
Mhm.
15 plus times. We're getting close to that moment. The
Yeah.
world has understood, these countries that has started the ball rolling with standing for delivery, like India, like China.
Yeah.
A lot of these countries were third world way back when, and they certainly weren't coordinated or motivated or had any intention of standing up against the West. They are now. They're all coordinated and motivated and sophisticated and wealthy as hell, and they're standing for delivery.
Mhm.
That's the problem. These contracts all have the ability to stand for delivery. No one ever did, but now they are.
What happens if they all stand for
then
delivery?
the, then you have a massive problem. Then you have the whole thing explodes. Or on COMEX, you would probably see a force majeure where they would cash settle because they'll protect
Yeah.
themselves. It's an exchange. In London, it's not. It's called over the counter. It's kind of like eBay, where I
Mhm.
trust you, you trust me, and if I screw you or you screw me, we're both done because no one's ever going to work with us again. Kind of the same way on eBay.
Okay.
Well, it's the same thing here. In London, you have, you know, way more paper promises than there are bars. And, people say, well, why don't these countries just stand for delivery and buy it all? Because they would have cut off their nose to spite their face. Instead, it's the paper cuts, the 1,000 paper cuts, little by little by little by little by little by little, you just drain, 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 drain. But mathematically, we're getting to that point
Yeah.
of there not being enough bars to indeed stand for delivery. And when we are this close to delivery, 10 days out, and there's roughly 4 times as many contracts standing as there are bars for delivery,
Wow.
that's a problem. So they will try hard by maybe incentivizing, giving them a carrot, so to speak, a higher settlement price if they roll forward to May or cash settle.
Mhm.
But those who do stand for delivery, yeah, it's even if only 20% stands for delivery, you're talking 50 million out of the 90
Yeah.
million ounces. So it's getting to that point where the ability to suppress the paper price on these Western exchanges is becoming very difficult. And at the same time, you have a $10 spread in Shanghai. So, in other words, Shanghai says, well, we'll pay you $10 more to buy the metal here in the West
Mhm.
and deliver it to Shanghai for $10 an ounce more. So you delivered 20 million ounces at a $10 premium, you just made $200 million if,
Yeah.
if you are, one of these big traders. And so great, let's do it. That's what they would do. That metal will never come back. And that arbitrage, which would
Mhm.
normally end when all that money goes to fill the arbitrage, isn't ending. The Chinese are like, nah, we'll just keep the heat up so that they continually, the traders in the West, want to send us their metal. And on top of that, there's a tariff. The tariff is paid when the metal leaves the Shanghai exchange. It's paid by the recipient, not by a company like JP Morgan who would buy here and sell there. So they're not only are they paying a 10% premium over the Western BS price, they're paying a tariff on top, or not a tariff, a VAT tax of about
Yeah,
15%. Sorry,
it's pretty
VAT
expensive.
tax. So they're paying a tax and a 10% or a $10 premium
Yeah.
to entice the traders in the West to deliver all the silver there. These things are all happening. And if you
Mhm.
don't take a step back and unemotionally see it, you get caught up in the price swings. And everyone gets all freaked out about the price moves, but take a step back and all you need to ask yourself is, who is standing for delivery for billions and billions and billions and billions and billions for 16 straight months? They do not fuck around, these people. They don't. Pardon my language. I
This is
just
gonna
want
be
it to
the
be very
title.
clear that these people are very serious. And when you're spending that kind of money, you know where the ball ends up. It's like Wayne
Yeah.
Gretzky's old statement, I don't skate to the puck, I skate to where the puck is going. And that's what these
Yeah.
people are doing. The people who are looking at it too closely are looking at the puck. Look to where the puck is going, and it becomes much easier to chill and realize that we're all on the right path, and that price is the greatest tool of misdirection, throws everyone off
Yeah.
when the biggest money in the world is saying that price doesn't matter, it's physical possession that does.
Of course. I am really curious when Shanghai opens back up after Chinese New Year, what the prices are going to look like and how that's also going to affect our prices. But I know at the end of the day, it's like when the markets are going nuts, if silver is down, I'm not worried. I know what I hold. I know the value. I'm preserving my wealth. I'm making sure I have a good future in front of me. But I am very interested to see what's going to happen in Shanghai. What is that?
Yeah,
What
well,
day
it's
did they
closed for
open
the
back
Lunar
up?
Year
Yeah.
celebration, and everyone knew that this was going to happen, that they were going to try, that Western traders would mess with the price while the Chinese are
Yeah.
celebrating. Um, So if you know it, be prepared for it and deal with it. Doesn't change anything. But, there's a whole school of investment theory, Bree, called wave theory, like Kondratiev and Elliott wave, which speak to the cumulative emotions of the masses. And it's tough to separate yourself from emotions, but people
Mhm.
listening to you and to your channel obviously are somewhat of a contrarian because of the things you talk about, right?
Yeah, a little
And
privacy
I think
stuff.
contrarians succeed in investing because they don't follow
Thank you.
the masses.
Yeah,
They can separate themselves from that um that
emotion.
psyche, that mass psychology. But indeed it's real, and emotions are real, and
Yeah.
this is a very emotional time when you see price swings like this that
Mhm.
are somewhat counterintuitive to what we all see in our mind's eye. But like I said, when the biggest money in the world, the central banks, the commercial banks, the sovereign wealth funds, and whoever the hell is doing it here, where there's the fact that there's no commentary on it, except for people
Yeah,
like me, should tell you how important it is. I mean, the
don't
fact
think
that
so.
they're not allowed to speak about it or aren't, I mean, look, if you realize that every single media outlet in the world is owned by 4 companies, these people are not talking about what is the only story. And that only story is not the price of gold
Yeah.
and silver increasing, beating everything. It's at who's standing for delivery, because no one ever did. And now all of a
Mhm.
sudden we are seeing huge deliveries every month. That's all that matters for me. I can
Yeah.
deal with the volatility when I understand
Yeah.
people making the rules are the ones that are quietly using this price and the volatility to throw everyone off. I can't deal with that volatility. I can't deal with it. I'm not buying that stuff.
Yeah.
Great. We'll stand for delivery. Thank you very much. And at subsidized prices, that's what's happening.
Yeah. Well, it's even similar to the crypto market right now. Most of my show, I do talk about silver and gold markets, but also I do talk a lot about crypto. And, you know, I'm a big believer in privacy coins, and I believe, there's a huge market for that in the future. And right now, obviously, a lot of just the entire market cap for the crypto industry is so down. But I think there are a lot of opportunities. And when I was listening to your episode the other day with Catherine Austin Fitz, you guys talked a lot about building like a digital prison, the control grid. And I was curious, I'll ask you one last question because I know you're very busy, but I was
Okay,
curious your
I'm good.
thoughts on privacy coins. In particular, there's a coin that I really am interested. It's a decentralized private stable coin. I don't use Tether personally. I think it's a way to censor people. I think it's obviously a centralized stable coin. So I think like there's a lot of possible threats to that. And I know you're very familiar with that. But yeah, I was curious your thoughts on, I guess, privacy coins in general.
I understand the concept. First of all, let me say this, that when it comes to being an authority on something, I am not an authority on crypto, but I'm very good friends with Mark Moss and Natalie Brunell,
Hmm.
two very, very prominent Bitcoin
Yeah.
commentators. And I'm on, in fact, Mark was supposed to be on our show yesterday or the day before, but had to reschedule. I've been on a show a bunch. I'll be on in a few weeks
Yeah.
with him. I've had Natalie on before. I've spoke at the XRP conference several
Yeah.
times, and we're both mutually friends with Vandel and Versan,
Hmm.
the Black Swans, and all of the crypto sphere I try to align with.
Yeah.
And I think you're kind of proof positive that you're someone who focused more on crypto, who then
Yeah.
understands the virtues of precious metals. I think we see the world in a very similar way. And that's the
Yeah.
point that I've been trying to make for years with the crypto industry. Not that I am a crypto enthusiast, not
Hmm.
that I am a crypto basher, but that there is no reason for us to be at odds with one another. It doesn't have to
Absolutely.
be either or.
No, you showed perfect.
I think that we're better together. We're
Hmm.
better not only in understanding of monetary history and theory, but your portfolio is stronger.
Hmm.
And what I have tried to do in the crypto sphere is unite the two communities. Now, as far as your question about privacy coins,
Yeah.
I don't know how private privacy coins are. Now, again, this will show how naive I am, but um, I think moving through the crypto sphere in privacy coins, I mean, that's great, right? But when you come back out into dollars,
You
where
don't.
is that
You
privacy?
don't
What
come back out
happens?
into dollars.
Right. That's the point. And so
Yeah.
I think that um, the concept of privacy coins is fantastic. But I think that they've gone to great lengths. Like, for example, you look at and going back to my conversation with Catherine, um, she talks about the plumbing of the
Yeah.
stablecoin bill, where everything goes in and out
Hmm.
of the Treasury. Well, the
Yeah.
same thing would be true here. When you go back into fiat, how do you justify, from point A to point B? How do you justify where point B ended up at? So I don't know. I mean,
Yeah.
again, I'm the wrong person to ask, but simply to say that I believe we are moving into a digital surveillance state, and that will
Yes.
be a culmination of the digital ID,
Hmm.
money moving to the Genius Act, the
Yep.
movement of money via stable
Clarity Act.
coins,
Yeah.
where everything is tracked by the Treasury inside and out. And I think, like I spoke to a client of mine, a very sophisticated lady, and she's a very big client of mine. And she told me, look, I trade in and out of privacy coins and stable coins. And I said, do you pay taxes on that? She said, no, I don't, but no one knows I'm in here. Well, when you come out, what do you do? And how
Yeah.
do you justify it? So again, I may be way off target here,
Yeah.
but all I am simply saying is that I think the concept of crypto as it being this private privacy ecosystem, you saw what happened with Bitcoin. That's no longer what it meant to be, a peer-to-peer,
Yeah.
you know,
Totally
form of
hijacked.
currency. Now it's been financialized and bastardized by, you know, the COMEX putting a contract
Hmm.
on it, MicroStrategies, BlackRock, and the
Yeah.
ETFs. It's literally become a
It's
part of Wall Street, and
crypto's
it's become
the first one.
trackable, very trackable.
Yeah.
So, um, what do I think of privacy coins? I think if you do things correctly, um, aren't doing it to evade the system, even by its very nature, privacy coins means very private. Just when you come back into dollars, don't think that they're not going to be able to come back to you and say, well, how did you get here? And again, if I'm way off
Yeah.
base, I'm sorry,
Well,
because it just goes to show
it's
how
okay.
naive I am about the
The
topic.
point is, the original ethos of cryptocurrencies were, ditch the banks. You are your own bank. We don't need
Right.
central banks anymore. Peer-to-peer cash, I believe. Bitcoin was hijacked. I am not a believer in Bitcoin. I don't think it really has a use case in my opinion. But with privacy coins, what I think is amazing is obviously peer-to-peer transactions. When we play golf together one day, I'm going to set you up with a Zano wallet. I'm going to show you how to use FUSD, because this is a way where you're not, having to convert back into the dollar because it is a decentralized stable coin and it is private. But yeah, I was just curious your thoughts.
Well,
I really,
who would
yeah,
take that coin other than, so you would take it, I would
yeah.
take it,
So,
but if you
um,
wanted to monetize it or use it for
yeah.
something to
So I
purchase
actually
something, what do you
so I
do?
do a thing. So there's a company called Zebec out there, and it's actually incredible. I'm able to take my FUSD and put it onto a card. My reloadable card is in fiat, but it has none of my information attached to it.
Oh, that's cool. Well,
Yeah, I can
there you
teach you.
go.
I'll teach you about this. So like say, hypothetically, if you are paid in these privacy coins, you could load them onto a Zebec card and you could transact with them anywhere.
That's very cool. I mean, look, in a world that is progressing to a digital surveillance
Yeah.
state, it's one of the reasons I like gold and silver, because they are
Yeah.
private. I think privacy is something that is disappearing
Of
by the
course.
day. I think of what it was like when I was a kid, before cell phones, before the internet, before cameras everywhere, before everything being digital. It was analog. It was, you pass notes to your girlfriend in seventh
Yeah.
grade instead of texting. I mean, everything was private, and now it's the antithesis of that. And if Catherine is right, yeah, we're moving into
Yeah.
that. And that's one of her points, was that she says that Trump was actually chosen
Yeah.
by the elites to bring the right side of the aisle into the digital surveillance state, who never would have wanted it, but showing what election interference could look like. Well,
Mhm.
now you need to have a digital ID in order to vote, which in and of itself is not a bad thing. These are the same people that complain about foreign interference of our elections, yet they don't want IDs. You don't have to have a digital ID. How about just a driver's license or
Mhm.
some state? But we're moving into that digital surveillance state because of a digital ID paired with digital money.
Yeah.
Yeah, it's scary
Oh,
to
and it's
think where
like
that
you
ultimately
you
leads to.
tweeted this, you can't do that, and it's like ultimately I think we're all on the same page. If you don't have privacy, if you don't have financial privacy, if we have a cashless society, you don't have freedom.
Totally.
Your
Totally.
behaviors can be controlled, and I think that's where, the people that are speaking about gold and silver and the power of gold and silver, the people that are talking about the original ethos of cryptocurrencies, we are so like-minded because we understand ultimately that our freedoms are at risk. And that's why even the beginning of the show, when you were saying, you are a patriot, I think you're a huge patriot because if you think about how our country started because people questioned the narratives. I mean, think about it. We had just a few percent tax that we revolted against. And I think people really need to kind of have they need more clarity. They need to look at the bigger picture and kind of realize why America was founded, and hopefully we can go back to those original ways.
Love that. No, totally. I love that. It's something that I would love for you to help me learn a little bit more about,
Yeah,
because again, like I
I'd
said,
love
and
to.
that's always been my number one priority, is that there's no reason that the two communities shouldn't get along and further what we're all trying to do
Mhm.
together, rather than being divisive of one another. It's not an either or situation. And some of my best clients have large positions in crypto, and understand that very well. So, they say you can't teach an old dog new tricks. I've been doing this longer than almost anyone in this industry, yet I have a very little bit of crypto. I own a few different, but it's not my thing. But I understand that we see the world in a very similar way, and so that we should be
Yeah,
united, whether it just be in rhetoric, or I happen to think that, look, crypto. The one difference to me is that, and again, privacy coins being a little bit different, but when people try and accumulate cryptocurrency, they're investing, they're trying to get wealthy.
yeah,
Fine, great. Take some of that wealth and put it in gold and silver.
of
Leave
course.
your initial bet on the table. I used to go every year. I would go on a trip with this other family. A buddy of mine, he was an all-American wrestler, and we would go to casinos we'd go on trips with our families, and everyone would go to sleep, and he and I would end up at a casino at the Atlantis or in Vegas or wherever we were with our families. And every time he would cash out thousands of dollars. And I'm like, dude, I've been sitting, this is the third trip in a row where I come up here with you, and I'm at the same table, and you come up with, where are you getting all this money? I've been playing with you for the last 8 hours. three trips in a row. He says, "You don't notice every hand I win, I put a green chip in my pocket." Well, that's the idea, is when you win, take some of that profit off the table
Yeah,
and reposition it into something that
absolutely.
is similarly aligned, but old
Mhm.
school. And I think the two together are a lot better. And just the understanding of the reasoning behind it
Yeah.
strengthens, I think, the entire argument.
Yeah, absolutely. I've actually been encouraging a lot of my friends that are just in crypto to actually sell some of their crypto and, be buying gold and silver. I think it's really important. I'm really fortunate. I grew up in a family that instilled those values in me. I'm really thankful for my mom. She's always told me, to put so much money aside monthly to buy silver. So I'm really thanking her
I
now.
will tell you, it's the greatest gift I've ever been given, Bree, honest to God. And people don't understand. My dad has a great statement, saying, he's like, life is like a roll of toilet paper. When you're young, you don't notice it spinning. Seems like it's going to be big forever. As you get
Yeah.
older, it starts to spin faster. You start to see the cardboard.
Ugh.
And I mean, I still feel like I'm 19 in my mind. I'm 55 years old. I'm like, where the hell did all the time go, man? Where the hell did it go? And paying yourself first and being regimented on doing so and continuously talking to your 50-year-old self saying, hey, you're going to have needs and you're going to want to do things and, weddings and college educations and trips, and you better start saving. And it's easy to just think you'll be young forever, and it catches us all. So I will tell you, the greatest gift I have ever been given in my life was the gift of understanding the laws of compounding and paying yourself first. Always pay
Yeah.
yourself first, even if it means only something very, very small, but get into the habit of doing that. You don't get good at anything, whether it be athletics or
Yeah.
exercise or relationships or saving or anything. You don't become an expert overnight. You do so by doing things over a long period of
Yeah.
time and being regimented and dedicated. And the same thing goes to paying yourself first with savings. Best gift I've ever been given. If anyone takes anything away from this
Yeah.
talk, I hope it's that, because it changed my life in immeasurable ways. I look at what I've accumulated, and how the hell did I do that? I don't even remember it, because it's just been every single 2 weeks, and
Wow.
respecting that someday your old self, if you could sit down and have a cup of coffee with your 55-year-old self, and what would you say to your younger self? And that, to me, is the best advice I could ever give anybody.
Well, thank you so much. It was really an honor to have you on my show. Thank you for taking the time to come on my small show. I'm just getting started.
You're very wise beyond your years, and the information you have is spot on. I'd love to come back on again and
Thank you.
have you on my show as well. And
Wow.
I'll have you on my show, and you can talk to me about the role of stable coins, excuse me, about privacy coins
Yeah.
and
Yeah.
what their benefits are. I mean,
Yeah. I'd
look,
love to.
if people don't ever have an open mind about other things, they learn more and more about less and less till they become experts on nothing. And they learn everything about nothing instead of expanding your mind. If you don't listen to other viewpoints, you never grow. So I would love to do that, and I
Yeah. Me too.
appreciate you having me on, and I'll look forward to doing it with you again, hopefully real soon.
Yeah. Thank you.